Good morning, all. TJ here with Insurance Agency Marketing Services. I'm one of the life directors here. And just thank you for joining us. Gary Voith, our panelist from Baltimore Life, made a good point right before we started that we're probably competing with the inauguration. So for those that, again, are in attendance, really appreciate your time and attention this morning, and hopefully some good information is shared. I'm very confident that it will be, and we'll go ahead and get going. Just some housekeeping issues before I turn it over to Gary here. First thing I want to point out is our new producer bonus. This is for, again, a new newly contracted producer with us in the first 6 months of contracting. You can choose any one of the levels that you see on the screen here and get bonused at that level. So as you can see, at the $100,000 premium level, and that is premium any way you can get it: annuity, single premium life, traditional life, a combination of any of those. At $100,000 will get you a $750 cash bonus, 2-year subscription to website and newsletter service or the latest generation iPad. If you would like to forego that and shoot a little higher, you can hit the $300,000 premium level, where you will have the option to choose between a full Social Security program and 3,000 piece postcard mailing, $2,000 in matching marketing money to promote your business, or a $1,500 Visa gift card. And if you say, I'm foregoing those two levels, I'm shooting for the stars, if you hit $500,000 in premium in your first 6 months with us, you will have the option to choose between some great incentives. One would be a 5,000 piece mailing and seminar coaching from one of our top producers, Matt Gill. 4,000 piece mailing and seminar coaching with one of our great producers, Mr. Dave Pimper, or a Ritz-Carlton Travel Rewards make your own personal getaway. So that is a highlight of our new producer bonus. If you have any questions concerning that, please don't hesitate to give us a call here in the Life Department. Again, TJ, 1-800-255-5055. Next thing I want to highlight is our creative services team. We've got a great team there that will help you with all of your marketing needs and pursuits, from your basic marketing to television, local channel deployment, video creation. I mean, just from soup to nuts, at whatever level that you want to dive into that, our creative team would be able to assist you. Josh and Adam are the members of our creative department, and again, would highly encourage you to reach out to them for any of your marketing needs. Great guys. Very skilled, and I'm very confident that they'll be able to assist you. You can reach them also at 1-800-255-5055 just to ask for Josh or Adam. Next, one of, I guess, my favorite of the intro slides here is an opportunity to tell you about the Insurance Agency Marketing Services Life and Annuity Academy. We will kick that off here this spring. Not a solid date, has not been set yet, but it is coming here very quickly. In that 2-day training session, and before I dive into that, let me tell you, this is training that we sponsor fully, pay for your airfare, your lodging, your meals. It's all on us. And even more, the education's on us. So over that 2-day training period, you will, be taught or presented with, those bullet points that are listed. But just to highlight a few, and maybe one that's not on here specifically, we'll discuss DOL. I'm sure here in a couple months, maybe that will flesh itself out a little more. with the transition that is taking place today, and we're hoping for some positive things to come there. But we'll be communicating what's going on in the DOL world. Indexed annuities unraveled. We'll be talking about large life case marketing, business insurance concepts, and wealth transfer tools. We'll also have a few of our top producers there to share some of their insights and practices with you. And I do believe it will be a very beneficial time for all in attendance. If you are interested, I'm going to open up a little poll question here for you to respond to. Again, if you would like some information concerning the Life and Annuity Academy, just select yes here on the poll, and we will reach out to you with additional information. I'll go ahead and launch that poll now. Again, just select yes or no. I'll give you a little bit of time there to respond and then close it out. Appreciate all the responses there. Give it a couple more seconds. Okay, I'll go ahead and close that out. Another thing I'd like to highlight, really love this, just communicating this to prospective producers and new producers, our paperless contracting allows you to save time and be more efficient in the contracting process. So what we do in our paperless contracting, we have you fill out a set of documents when you first come on with us. You select, carriers that you want to initially be contracted with, and then going forward, if you have a new carrier that you'd like to write with and are not yet contracted with them, you just simply reach out to one of the members on the life team. TJ, want to be contracted with XYZ, and then I take care of it from there. So paperless contracting, we get everything set up for you. You just kick back and wait for a message from us saying that you're contracted with the carrier. So more information on that, please don't hesitate to reach out. 1-800-255-5055 would be more than happy to share more information on how you can be a part of the paperless contracting here at AIMAS. Also want to highlight our website. If you have not yet visited us on the World Wide Web, our website is there listed at the top, www.imsinc.com. Great sales tools on there, great information, talks about some of the companies that we represent. Great info regarding all of our product lines, and one thing I really like namely on the life side, is our term and guaranteed UL quoter. So we're always happy when you call and request quotes. But if you're kind of in a rush, or just need quick information in a pinch, you're welcome to just log on, run a term quote there, and then follow up with us for the appropriate paperwork later on. So again, great looking website, great tools on there. Would highly encourage you to visit us at, again, www.imsinc.com. Okay, now on to our referred producer program and marketing reimbursement. So when you refer a new producer to us, just for the referral, we cut you a check for $50. Okay, when your referral does business, it's another additional $100, and then we pay you 20 basis points on business written by your referral thereafter. So you can do the math there. Very lucrative opportunity for referrals. So if you know anyone that could benefit from our great services here at Insurance Agency Marketing Services, please don't hesitate to pass their name along to us. pass our name along to them, and you will be rewarded for the referral. We also have our marketing reimbursement. I will not get into great detail with this, but just know that for every $100,000 in premium that you bring in, we contribute $200 cash into a marketing account where we pay 50% of your marketing expenses out of. For more details on that, please give me a call, 1-800-255-5055, and I will or any one of us here will be happy to spell that marketing reimbursement program out in greater detail. Okay, at this point, I'm going to turn it over to our guest, Gary Voith with Baltimore Life. And Gary, I'll go ahead and give you control there. And there we go. Hello, Gary.
Yep, there we are.
Okay,
okay.
Gotcha.
We had a problem there. I apologize. Well, let's go backwards. I was talking to myself there. Good morning, everyone. Gary Voith, I'm Vice President of Corporate Marketing and Communications here at Baltimore Life. Certainly want to thank you for investing some of your very valuable time today to learn more about Baltimore Life's asset transfer products. But more importantly today, we're going to focus in on sales concepts and sales ideas in this session. I do many different webinars, especially sponsored by AIMAS, and we get into product and all the particulars. But today we're going to be talking more about some sales concepts. Let's start, though, before we get into sales concepts. If you haven't had the chance of being introduced to our products, let's talk a little bit about them at a real high level. Again, if you want to get down in the weeds a little bit deeper with these products, we have other webinar sessions that are set up to do that. We're going to talk about two products today and sales concepts that support them. They're both part of our asset transfer product portfolio. Our Generation Legacy product is really designed for senior clients who have single premium funds coming from non-qualified deferred annuities and other qualified plan funds that are not needed for daily living. Obviously, this allows them to create an estate, increase their estate in a tax-efficient manner, and do it in a tax-efficient way. The issue ages for this product are ages 60 through 80, and this product very uniquely allows you to write a single application, and Baltimore Life will issue two products that work seamlessly together: a single premium immediate annuity that will receive the transfer of the funds from these vehicles, along with a limited premium payment whole life product. Over a period of either 7 or 10 years, this SPIA will pay premiums on that life product until it becomes fully paid up. We have simplified underwriting for this our life product through 4 tables of underwriting, and we also highlight that underwriting with a live underwriting process, which means that, as soon as you write that application, you can pick up the phone, complete a live interview with your client in our call center, and well over 90% of the time, we're going to give you an immediate underwriting decision. This product also offers automatically, upon issue in all states where it's approved, our accelerated death benefit rider, which truly can provide living benefits to your client at a time when it's needed most. Now, clearly, this product is designed to address the needs of clients who have funds in qualified type plans. We have another more traditional single premium whole life product that's designed to take single premium dollars from after-tax cash funds, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Same goals. Client wants to increase their estate value, do it tax efficiently, and through the use of a life insurance product. The issue age for our single premium whole life product is 50 through 85. And with this product, we offer simplified underwriting through 8 tables. So a client with a few more challenging health conditions could qualify. This product also has some very liberal partial withdrawal features. You can start taking partial withdrawals at a rate of 10%, scaling up to 100% in years 2 through 6. And from year 6 forward, you have 100% of the cash value available for partial withdrawals. We also have a very good accelerated death benefit rider. Same 3 health event triggers that we offer for our Generation Legacy product and rider, but this rider allows you to do full accelerations or partial accelerations. So again, for more details about these products, you can get on one of our webinars or on our agent website. We have product toolkits set up, and inside those product toolkits, we have training in there, and the webinars are part of that training. So let's get into the concepts and the ideas, sales ideas that we wanted to talk about today that apply to these products. So clearly, you know, all of you probably are out there doing fact finds, hopefully, some good detailed fact finding, because when completing any type of a fact finding process, you'll be taking the time to ask your clients about funds that they currently have in savings, CDs, annuities, mutual funds, stocks, and qualified plans. Locating these funds will certainly help you find potential premium for one of our asset transfer products. Now, of course, this assumes the client does not need these funds for daily living. So finding or locating the funds is the first thing that's important to be successful in this market. You also can help your client find potential premiums for our single premium life products by reviewing their 1040 tax forms. Line 8A will reveal table interest income that they report, and 8B will show the tax-exempt interest. On lines 15A, you'll find the IRA distributions that are being declared, and on line 16A, it'll reveal distribution amounts from pensions and annuities. So when you have a comprehensive understanding of the interest and distributions that must be declared, and the cumulative totals from savings and other investments recorded on your fact find, you will have the information, of course, you need to start a good discussion with your client related to their goals about their money that they want to leave behind to their heirs. So locating funds and different ways to do that, clearly through the fact-finding process or using tax forms to support your fact-find process. But the most important thing is it's not important just knowing how much money is out there, but more importantly, what the goals of the money are. Do they really need it for income? Are they looking to create an estate and pass money behind? Obviously, we all know that sometimes in a fact-finding process, it gets a little bit intimidating that the client maybe does not want to reveal to you, being this new person they've met, you know, especially people that aren't existing clients, what they have in their CDs and their portfolio in general. I think there's other ways to get around doing that. If you can identify that they do have CDs, maybe they have 2, 3, 5, or 10 CDs, you could start talking about, you know, what the intent of that money that's in the account without actually knowing how much is there. And then you start to build confidence through that fact-finding interview process to eventually be able to, you know, tell your client about the concept of these products and how they work, and then all of a sudden they'll start saying to you, well, what if I put $50,000 into something like that? How would that work? And then all of a sudden you start realizing how much funds they might in fact have available or want to expend for this type of purchase. So let's start talking about one of the concepts that we wanted to share with you today. You know, with the understanding of the importance of a good fact find and knowing your client's goals, now let's review a few of these concepts. The first one is, let's assume that you have a client who's age 70 and a half with $50,000 in an IRA. Based on other income sources, this male does not have a need to take an income from the IRA funds and simply wants to leave some of that money to their heirs. Knowing that he will need to make a minimum distribution from the $50,000 anyway, he decides instead to make a partial transfer of $23,881 into the SPIA portion of our Generation Legacy product. As a result, he will receive a death benefit of $33,254 with the 10-year limited premium payment whole life product that's also part of the Generation Legacy package. Let's not forget that if he dies during the 10-year period while that SPIA is being used to fund the life insurance, the remaining payments from the SPIA would also be paid. I think it's important to go back a little bit on product, especially if you're not familiar with our products, to realize that. We have, with our Generation Legacy product package, we have two products, a SPIA that receives the transfer of the annuity or qualified funds, and then the limited premium payment whole life product. So over that period, as I mentioned, of 7 or 10 years, the SPIA will pay premiums automatically. Nothing for you or the client to do. Will automatically pay premiums on the life product. But if that client dies during the 7 to 10 year period while the SPIA is funding the life insurance, not only will the beneficiary receive the income tax-free death benefit from the life insurance that's much greater than the single premium paid, but they'll also receive the remaining payments from the SPIA not used to pay premiums on that life insurance product. So just understand that basic concept on product as we're talking about the sales concept. So this client used $23,881 from the IRA money to fund that Generation Legacy product. So he saw a $10,000 increase in his estate value roughly. So with the other $26,119, instead of dealing with that minimum distribution problem, this 70-and-a-half-year-old male non-tobacco user will start a SPIA for income that would actually pay an income of $2,274.31 a year for life. So that's just a way of dealing with the minimum distribution situation to not only increase their estate value of money they really don't need to live on, but also to provide them with some income so they don't have to deal with worrying about that minimum distribution problem. So let's take a look at another concept. It reviews an example that's very common, a senior that has money accumulating in a CD and only has a goal of passing it along to their family members upon their death. How often do you see that happening? Seniors, as you know, have many CDs out there. They compartmentalize their funds, and they pretty much have it earmarked as to what they want to do with it. So in this concept, we have someone who started with a $25,000 amount in a CD, earning, let's say this is crazy today, right, 3%, and they're in a 25% income tax bracket. After 5 years, at age 70, this male age 70 finds that the CD has grown to $29,040. Income taxes paid over the 5-year accumulation period would be $1,010. Now keep in mind that under certain circumstances, proceeds paid at death on the CD may be settled in probate. Also, interest income must be declared, of course, each year. So with that said, so to help your client achieve their goals of passing money to their family in a tax-efficient manner, they apply for and get issued our single premium whole life product with an income tax-free death benefit of $36,819. So they've increased their estate again over almost $12,000 with that single premium purchase. The single premium whole life policy cash value in just 5 years would be $21,392. If this individual did in fact have an emergency and really needed some cash at that time, they could take at that point up to a 40% partial withdrawal. Starting in the 6th year and thereafter, 100% of the available cash value can be taken as a partial withdrawal. Of course, the option to take a partial withdrawal from the available cash value starts as early as policy year 2. So by transferring the leave behind money, as we call it, from the CD into the single premium whole life product, your client would not need to declare the interest income that's subject to tax. The single premium whole life income tax-free death benefits are paid outside of probate. This product provided them, as I mentioned, with nearly a $12,000 increase in their estate value and can also be passed on to their heirs. And let's not forget that in states where it's approved, the accelerated death benefit rider is automatically issued with the policy. This can provide living benefits to your client in the event of a terminal illness, nursing home confinement, or the need for home health care or adult daycare. So what if that $25,000 wasn't in a CD, but instead it was in an annuity or another qualified plan? So in that scenario, the $25,000 would be transferred into the SPIA portion of our Generation Legacy product. we would issue, along with that, a 10-year limited premium payment whole life product that's also part of the Generation Legacy package, and it would provide an income tax-free death benefit of $34,813. Let's not forget that if the client dies during the years while the SPIA is being used to pay the premium on the life product, the remaining payments from the SPIA would also be paid to the beneficiary. Of course, the beneficiary would get a 1099 on any taxable portion of that SPIA distribution. You know, you can never forget that if you're rolling money from an annuity or from an IRA into this product, eventually Uncle Sam has to get paid. The beauty is, though, when you roll it into our Generation Legacy package, it goes into this qualified SPIA that's funding life insurance, but it's funding it over 7 to 10 years. As a result, we can spread the tax out over that same 7 or 10-year period for your client. So they will get a 1099. And if the client dies early and the beneficiary is getting the remaining payments from the SPIA, of course, they would be obligated as well to get a 1099 to pay for the taxable portion, or tax on the taxable portion. So again, death proceeds would bypass, in this example, would bypass probate and significantly increase the amount of money that would pass on to their heirs. As mentioned before, the client also would have the peace of mind knowing that in the event of a catastrophic illness, living benefits could be made available through our living benefits rider. So let's look at this third concept. It reviews the tax troubles of an annuity, knowing that the client never intends on annuitizing funds and simply wants to leave it behind for their heirs. So I'm sure many of you sell annuity products on a regular basis, and people continue to buy multiple annuities based on the interest rates they're getting, the tax deferral, but they never have a plan of using the third leg of the stool, and that's the annuitization feature of that product. Their only plan was to grow cash tax favorably, and eventually if they die, what are they doing? They're simply leaving the tax behind for their heirs that are probably in a higher tax bracket. So if that's their only goal, in this example we have Sally, who's a 70-year-old non-tobacco user. She has $70,000 in an annuity that she started years prior with an original premium of $50,000. We assume that she is in a 15% tax bracket. Now at her age of 78, this annuity cash value would be $88,674. This assumes a 3% interest rate during the accumulation period. Now, if Sally died at 78 and her beneficiary received the proceeds from the annuity, income taxes would be due on that gain of $38,674. So let's say the beneficiary is in a 28% income tax bracket, a tax of $10,828 would be due. So the net result of the proceeds after tax goes down to $77,846. So if Sally would instead have transferred that $70,000 in the annuity at her age of 70 and put that into our Generation Legacy product, the face amount of the life policy would have been, upon issue, $109,831. Now, if the SPIA within the Generation Legacy product receiving that $70,000 in premium paid 8 premiums into a 10-pay life plan, the taxes paid by Sally at a 15% tax bracket on the annual 1099 income would have only been $3,359. If Sally died at 78, the total death benefit from the life policy and the remaining payments from the SPIA would have been $125,427. Of course, $109,831 would be paid income tax-free from the whole life policy, and $15,596 would be paid to the beneficiary in a 28% tax bracket from the SPIA. There would be a $1,568 tax to be paid by the beneficiary on that remaining SPIA distribution. So another concept is one that is starting to fade a little bit, right? And that's the pension decision, the pension dilemma out there, as we call it today. So in this concept, let's review this pension decision made by this fictitious client, Joe Jones, who's age 65, and his wife, Sally, age 62. From his employer pension, Joe is eligible to receive a $1,500 joint and 2/3 survivor benefit. Joe also has accumulated $200,000 in a 401k. Now, if they elected to take the life-only option instead, this couple would receive $1,825 a month. That's an extra $325 per month, or $3,900 more per year. This would increase their pension income for retirement by 22%. Now, if Joe and Sally decided to take the life-only option at $1,825 a month, they could use some of the assets from Joe's 401k account to purchase enough life insurance on Joe that would provide Sally with the income at his death. Taking this option would allow Joe and Sally a way to stretch their retirement savings and increase income during their retirement years. So, reviewing this possible solution, we again see that Joe and Sally would receive $1,825 a month, right, from the pension. Now, if Joe at 65, a non-tobacco user, were to transfer $125,000 from his 401k into the SPIA portion of the Generation Legacy product, Baltimore Life would issue a 10-pay whole life policy with a face amount of $193,403. This income tax-free death benefit would always be available to provide an income for Sally at Joe's death. Now, the remaining $75,000 that was left in the 401k would just be left to accumulate and certainly can be used for additional future income as needed. But let's not forget that if Joe predeceases Sally during the 10 years while the SPIA is being used to pay the Generation Legacy product, Sally would also receive the remaining payments from the SPIA at his death. These additional funds could be used as income by Sally. This illustration you see here shows that Sally would always receive more income by taking proceeds from the Generation Legacy product as compared to the original pension payout of life income with joint and two-thirds. So let's do a side-by-side comparison to see how this whole thing sized up. Did this product solution work for Joe and Sally? Well, if Joe dies first, he and his wife received a higher income while Joe was alive. Sally received more income than offered by the survivorship option from the pension. Of course, Sally would receive a stepped-up cost basis on the 401k proceeds. Now, the life insurance proceeds would be received by Sally income tax-free. Finally, let's not forget that there was $75,000 left in that 401k to accumulate, and it's liquid for her potential income needs. But here's the kicker. If Sally dies first, Joe still would receive the higher pension benefit, $1,825 a month. He would also have access to the cash value of the life policy within the Generation Legacy package. At Sally's death, he can name another beneficiary on the life policy within the Generation Legacy package. And the beneficiary would also be changed on the SPIA portion, assuming it was still around funding that life insurance. If additional income was needed by Joe, he could always tap into the $75,000 that was left in the 401k. All right, here's a bonus concept. Annuities, as we've talked about, are great products to accumulate cash on a tax-deferred basis and produce a lifetime income option. Taxes are paid only when the money is withdrawn, keeping in mind that a penalty can be imposed by the government if money is taken prior to age 59.5. Now, with an annuity, you can time distributions that may minimize inclusion of Social Security benefits in the provisional income. With an annuity, if you surrender or need to withdraw funds during the early years of the contract, surrender charges, of course, may be imposed. Now, a tax disadvantage that is sometimes overlooked is that when the annuitant dies, as we've mentioned, the beneficiary will need to declare any gain on the annuity proceeds received as income. Usually the beneficiary is in that higher income tax bracket. So an annuity can be a great tax-efficient product in the accumulation phase and certainly can be annuitized for income, but an annuity isn't necessarily the best product if the client's only goal is to pass those proceeds on to their family or favorite charity upon their death. Let's say that instead of putting $50,000 of leave behind money from a CD into an annuity, we use it as premium for a single premium whole life product. Now, a male 64 non-tobacco user would issue a single premium whole life product for a face amount of $83,893. This provides them with an increase in their estate value of nearly $34,000. The single premium whole life policy would accumulate cash value on a tax-deferred basis, and partial withdrawals are available starting in policy year 2, as I mentioned, at 10%, scaling up to 100% in policy year 6. The annuity cash value after surrender charges is shown in the illustration you see on the screen. You'll notice a column showing the gross death benefit from the annuity at different ages prior to tax being paid by the beneficiary. Right next to that, these numbers you see the net effect of the death benefit payment from the annuity to the beneficiary, assuming a 33% tax bracket. Clearly, in all years, the single premium whole life product would pay more death than the net after-tax proceeds paid to the beneficiary. Just remember, single premium whole life death benefits of $83,893 would be paid income tax-free to the Benny. The policy owners have access to the available cash value just in case through partial withdrawals or loans. And finally, let's not forget about all the benefits of the accelerated death benefit rider. So with that, those are some of the basic concepts. I want to remind you, though, of a couple of direct sales ideas that you can start generating a prospect list to go out and start selling today. Out on our agent website, we have product toolkits set up for every product that you're contracted for with us. And inside those product toolkits, you really find everything you need to sell and market our product here at Baltimore Life. Certainly your resources at AIMAS can also help you with any of this. But we have a document out on the agent site called the Single Premium Sales Ideas, and it goes into detail on sales ideas that you see here on the screen. Of course, the leave behind money concept. Most people get the leave behind money concept, and if they don't, it's going to generate a great conversation at your point of sale. What about all those annuity clients that you've been out there selling and you have on the books that their only plan is to move that money along to the next generation? Good prospect list to start with. What about some of the older paid-up life policies that are on the books where the cash values are close to equaling the death benefit? Some of these people have multiple paid-up policies. As long as you have at least $5,000 of cash value, you can 1035 these paid-up policies into our single premium whole life product. What about the ULs where the cash values are going in the wrong direction? You all know about the UL rescue program, right? $5,000 in cash value can be 1035 into our single premium whole life product and give them a paid up death benefit. And then finally, and there's many other ideas out there, but this is a very popular one, the burial account concept. How many of you are out there selling seniors that say to you, Mark, I really don't need any life insurance. I have a burial account set up. Well, that means one of two things. They either have a prearrangement at the local funeral home, or they've got a $15,000 CD set up at their local bank that their kids know that's the money set aside to bury them. Well, here's how that role play might go with a 70-year-old female. Mrs. Jones, you're 70. You're going to live many more years, and as you know, costs are going to go up. What if I was able to show you a way to take the $15,000 you had in your CD intended for your burial expenses and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or in an extended health care situation, you could actually access some of that cash to help with your end-of-life expenses and still set it up to have remaining life insurance benefit for your family. And oh, by the way, if you were really in a pinch for cash, and I know that's not your intention, but if it did happen, this contract has some very liberal partial withdrawals where you can get a cash that you might need for emergencies. So that's called the burial account concept, and I can't tell you how many agents have gotten started selling single premium products in this way. They start selling smaller premiums, $5,000, $10,000, $20,000, $30,000 premiums, and then over time built up because they started doing good fact finds. We find that the average premium for our single premium whole life product is about $30,000 to $35,000. The average premium we see for our Generation Legacy product is about $60,000. Now, I mentioned we have those product toolkits out on our agent website. This is just a screenshot of one of those toolkits, just a wealth of information out there to help you. Another thing I want you as a takeaway to write down is our Mobile Link software. Mobile Link copy down the address, mobile.boltlife.com, is basically like having our agent guide and a rate calculator right in the palm of your hand. If you go to your smartphone, tablet, anything connected, you type that in, it's going to take you to that web address. Once you're there on your smartphone, hit the shortcut on your phone that allows you to save that address as a link. It'll create a little Baltimore Life logo saying Mobile Link. Now you can launch it just like any other app. But inside of Mobile Link, whether it be for single premium whole life or generation legacy or our final expense product, SilverGuard, you can get the product information, the underwriting guidelines, and more importantly, a rate and value calculator. The two single premium products we talked about today are non-illustrated products. You do not need a signed illustration to sell them. So as a result, you can calculate everything you need with the client to show right there at point of sale using your phone. It is that quick and easy. One thing I'd like to promote before we finish here today is our agent conference for the year of the trip is 2018, but of course it's for the year 2017 qualifying amounts. That trip is going to be to the Omni Amelia Island Plantation Resort in Florida. Beautiful resort, great beach time, great pool time, and just golf, everything else going on. The great thing about our trips is that we have one of the lowest qualifying amounts in the industry. For single premium business, if you do $600,000 of single premium business for either one of those products, we count 10% of that towards our trip. And our trip qualification is 60,000 credits. So 600,000 in premium converts to 60,000 credits. And that means that you and a guest would be all expenses paid on this trip to the Amelia Island Plantation Resort. I'll tell you this, the other great thing about our trip is we don't have business meetings. This is just all about pleasure and fun for you and your guests. Great opportunity to relax, enjoy yourself, and network with all the leaders here at Baltimore Life. And hopefully many, many leaders from AIMS will be attending. And I'm betting if you qualify for our trip, you're probably going to be qualifying for one of the great AIMS trips as well. So with that said, that ends the presentation for today. I put out here a phone number for you at Baltimore Life, first of all, and that's our agent services line. That number toll-free is 877-533-2468. And I know at IMES you have a direct line that we might want to repeat again.
You bet. That number is 1-800-855-5, or excuse me, I don't know what number I was just giving it to. 1-800-255-5055. Thank you, Gary.
Thank you, everyone. Have a great rest of the week. We appreciate your business.
Hey, Gary, I did have one question if you're
Sure.
still available for that.
I am.
Someone asked if you said, it says, did you say the SPIA is for life?
No, the SPIA, basically the Generation Legacy product with a single app, we issue two products, a limited period payout on a SPIA. So the SPIA is where the money goes, the rolls into, and that SPIA is set up to pay out over 7 or 10 years, and it pays an annual payment directly to the life product that is, again, paid up in 7 or 10 years. So a 7 or 10 year payout on the SPIA will pay up a 7 or 10 year limited premium payment whole life product. So after 7 or 10 years, the SPIA goes away, it's done its job, and the life product continues on fully paid up.
Okay, great. Thank you so much for that, Gary. Again,
Sure.
Gary, just wanted to thank you so much for coming on with us and sharing some great information. I know I learned a lot here in these in this last half hour, so really appreciate your time. And just want to encourage everyone, if you have additional questions, please don't hesitate to reach out to us here at IMES, 1-800-255-5055. And before we close out here, I'm going to launch a final poll question. Would you be interested in contracting with Baltimore Life? So you can select yes or no. We'd love to get you out that contracting information, and go ahead and give you a couple seconds more to respond to that. Okay. All right. Thank you again, Gary. Thank you, all of you who attended here today. I will be reaching out to you all to follow up with any questions or to get you contracting information out. Have a great Friday and a great weekend.
Thanks, everyone.